Thank you very much. A very good evening to all the participants who have registered for that and who have already joined for this wonderful panel discussion on tax audit. Yes, I know tax audit is very important. A lot of questions are in the mind, and we were receiving a lot of queries also. DTC Secretariat, we were receiving a lot of emails. So we thought in this Thursday webinars, which we are doing every time, let us do actual question answer session with the experts in the direct tax. All the three Central Council members who are with us would be answering your questions. And what we have done is, for particular this session, we have taken actual questions from the participants. It is not the questions which generally in a panel discussion you would find that a moderator would make certain questions and I would share with the panelists and they will answer. But there would be the live question answer sessions. Even the questions which have come also have come from individual participants. We have 1,300 registrations, and I'm sure as and when we go ahead, already number of people will also increase and the fresh questions will also keep coming. So to all the panelists, I would be taking those questions also. So I welcome you all. But before we start with the question answer session, just briefly, as you know, this is Thursday and we are doing every Thursday seminars and tax audit, which is now due on 30th of September. I have been receiving a lot of telephone calls whether this date will increase or not. So of course, as a matter of principle which we have decided, nowadays we are not making an application for increase in any particular date. Council has taken that decision. But obviously, informally, we are discussing with CBDTD. We are keeping our fingers crossed. Way it is functioning, my personal view would be, it may happen that date may get extended. But my request to all the members would be, please do not feel or do not be at relax. Please try to complete your audit work as far as possible before 30th of September. Do not wait for the last moment thinking that date may be extended. If it get extended, well and good. But obviously, as a chartered accountant, we should be prepared. We should do our timely work on that. Coming to the recent developments, as you all know, last time also I mentioned that we have already revised our guidance note of 31st of July. And now I would, first of all, before going that, when it comes to a guidance note, now I would like to introduce my three panelists today. Of course, none of these three requires any introduction. All are Central Council members. And I would say one is Bhishma Pitama of Direct Tax, one is Krishna Bhagwan, and one is Arjun of the Direct Taxes in our Central Council. Sanjay Agarwal ji, a truly Bhishma Pitama. Any query we have in direct tax, we just go to him and I'm sure we will have a solution. He was the architect of the last guidance note when he was a chairman. I was privileged to be his vice chairman at that moment of time when in 2023 last revision of guidance note happened. After that, obviously, we could not revise that guidance note because there were not significant changes and also budget was delayed because of the elections. It came in July 2024, but we did came with an implementation guide. Now this implementation guide and the revisions in Form 3CD has been incorporated in the revised guidance note. So Sanjay Bhai Agarwal is a Bhishma Pitama. As I said, is a Central Council member having experience of more than 15 years as a Central Council member. And whatever may be query on the taxation, I'm sure he has an answer to it. And you will see it in next 2 hours. Whatever I put forward, whatever questions you may raise, now also I'm telling you, I'll try to take those questions also, after which I've completed with the questions which you have already sent. I'm sure Sanjay Bhai Pramodji would be trying to answer that. Pramod Jain sir, again a Central Council member. He is in his 3rd term, expert in direct taxes. And not only direct tax, he is also expert in all other subjects. He is the only speaker I have seen who can speak on any topics. And he was a chairman of Accounting Standards Board. Now he is a chairman of Expert Advisory Committee. And therefore my chairman also, because I'm a vice chairman in that particular committee. Sanjay Bhai is also my previous chairman, but a chairman of International Tax Committee also right now. So Pramodji, thank you very much. Sanjay Bhai, thank you very much for joining. Of course, one more Central Council member and the panelist, as I said, Arjun of this particular session, he would be also joining in maybe in another next 10 minutes. He is coming from Indore. He is first term Central Council member, but very expert in direct tax, expert in litigations. We'll be also trying to put questions to him. So I welcome you all the three panelists for this session. And thank you very much, Sanjay Bhai, who is along with me in the council hall, Pramod Jain, who is already online, and Pankaj Shah, who will be joining. Of course, this whole program, revision of the guidance note, and there is one publication which has already come in regard to ITR 1 and ITR 4, and ITR 2 and 3 is in pipeline, 5, 6 and 7 is pipeline. I would like to put it on record. All these publications, all this event would have not been possible without my Vice Chairman C.A. Vishnu Agarwalji. Again, and coming from Mumbai, from where I hail, expert in direct tax, and who is holding the fort. When I was also not there, he himself individually has looked into each and every area. Thank you very much, Vishnu Bhai, for such a great support. And because of your support, Direct Tax Committee is able to do such a work, and we have been able to come with this guidance note in a timely manner, that is 2 months before actually when the tax audit is getting due. So I welcome you all. And with this, now I would request my Vice Chairman, Vishnu Agarwalji, to kindly address the audience.
Thank you, Chairman. Chairman of the Direct Tax Committee, Piyush Chhajer ji. Central Council member, Sanjay Agrawal ji, Pramod Jain ji, and in the absentia, our Pankaj Shah, Central Council member from Indore. As rightly said by our Chairman, the Bhishma Pitama of the Direct Tax, Sri Sanjay Agrawal ji, and I will say Bhishma Pitama of our Council, because when I enter into the Council first time, and I have taken the guidance from Sanjay Agrawal ji, because I know from Sanjay Agrawal ji from last so many years, and he has given me so many guidance how council works, how we work in the council, and Pramod Jain ji, the expert. And when a matter comes for any expert advisory, any 32 central council member always says this matter will go to the Pramod Jain ji. And of course, our Pankaj Saji has not joined. He is also key command on the direct tax. Each and every question, whenever we ask to him, I can say he's the chalta firda reckoner. Any question, anytime we can ask to him. Friends, we also release, our council has released the guidance note on the tax audit 44AB on very timely manner, and our great support of Sanjay Agarwal ji, Pramod ji, our chairman Piyush Chhajer ji, for this guidance note. He is giving all credit to me, but ultimately he is the Benborg of this direct tax committee, and he is the putting forth for the guidance note 44AB and all the ITR from 1 to 7. We are releasing 1 and 4. We are already have released, and remaining are in the pipeline. And most importantly, friends, our new finance bill 2025 is passed by the Lok Sabha and Rajya Sabha, and we are happy to say that more than 1890 suggestion is accepted by the select committee, and now we are going to each and every city for this finance bill 2025 program. So I request each one of you to take maximum benefit of each and every program. Now I will not take much of the time, because all our participants are here, and I request our chairman Piyush Chhajer ji to take the charge.
Thank you very much, Vishnu Bhai. And just before we go to the actual session, just to update all the members. In fact, yesterday we had a member meeting with the member legislation, who is the board member of the CBDT. Sanjay Agarwal ji was also with us. And we were discussing various issues in regard to glitches which are coming up in ITR. There are certain mismatches in the ITR, certain requirements needs to be changed in the ITR. Even in fact, in tax audit, we had made earlier also representation that the clause 22, which deals with MSME, wherein there was an auto-populated total was coming in a particular clause, whereas my guidance note and our understanding was that it should not be a total. So that I've been told after our representation that utility has already been changed. So now it's not an auto-populated, wherein actually the members can give the figures what they feel or based on our guidance note. So yesterday we had a very great discussion on that, and we have made given our fresh representation also, and including those representations included on certain calculation errors which were there in ITR as far as long-term capital gains is concerned. wherein you have sold certain properties and you have a benefit available if it is sold after 23rd July 2024. Options are available where the tax payable is lower. You can opt for that particular, but the utility was not considering appropriately. So such suggestions have gone. I'm sure all those suggestions will be taken positively, and we'll see the result or some amendment coming in utility in times to come. So I thought I'll just update on that also, Sanjay bhai and Pramodji. But of course, very importantly, now I would like to come on the topic. As I said earlier to the members, for the benefit of the members, we have taken the printouts of the questions which you have sent to us. So please be attentive. It would be my endeavor to cover all those questions subject to time which I have. I've also tried to merge certain questions because maybe the certain questions may be of repetitive nature or answers may be similar also. So we have tried to merge it. Those questions I have divided amongst all the three panelists, obviously Sanjay bhai, Pramod ji and Pankaj Shah ji. And certain questions would be taken up by me. I would be moderating the session along with my Vice Chairman Vishnu Agarwal ji, who will be also taking up certain questions also. So before I would like to start this session, and before I go on to the technical questions, obviously I would like to start with Sanjay Agarwal ji. Obviously, Sanjay Agarwal ji, before going on actual questions, Sanjay Agarwal ji, if you can throw some light, because as I said, the guidance note was revised in 2023. Can you just throw light for the benefit of the members, the importance of guidance note on tax audit? It's a general, my members are looking how they should follow, whether it is recommendatory, mandatory, if they are not complying with the guidance note, what they should do. If you can just give us a general background about that, because as I said, you are Bhishma Patama of this guidance note. I think so nobody else better than can answer this. Please, Sanjay bhai.
Thank you, Piyush bhai. Thank you, viewers. And the type of flowery things said about me, I'm not even that expert. But somehow, since a lot of work has been done since beginning, the tax audit utility have been introduced by the board and I was in the council. So far as guidance note is concerned, the authority of any guidance note which is issued by the council, it is not required to be specified here. It is compulsory. We should follow them. However, wherever there are certain things which are depending upon the circumstances, disclaimers can be made. The guidance note is given because this is the only publication wherein we give clause by clause, item by item, the detailed explanations, and wherever it is possible, the examples. This year in the guidance note, we have made a lot of thrust upon on the physical report also. And we have also said about that the utility is not the final one. The final one is the form. As Piyush bhai was telling us that we have represented yesterday, there are two clauses which has been omitted in the utility, but in the form they were existing regarding 56 to 10 also.
Clause 29AB.
29AB specifically. So the guidance note is always provide not only the guidance to the member, but also help them in completing their task. So this is the small input.
Thank you very much, Sanjay bhai. Pramod bhai, Chairman, Accounting Standard Board, this guidance
Yes, sir.
note does not goes, of course, past chairman, this guidance note does not comes into public domain without consent and without the views of the ESB. You would like to add up, because I know this is your favorite subject, and whenever you speak in the session also you speak on that. So I thought I'll take your views also on guidance note. At what authority and high pedestal? Of course, Sanjay bhai has already said he would like to add on that.
Thank you, Piyush bhai. Namaste to all. In fact, namaste to everyone, and thanks to Piyush bhai and Vishnu bhai for giving me an opportunity to share my views. In fact, it is so much of humility of both of them, because we all three panelists were not required. Even if they both were wanted to do this session, they would have answered all the questions. But it out of their humility, they have asked us, "Okay, aapse bhi puch lete hain." So nice of you, because they both are authority in income tax. Uh, what you have said, Piyush bhai, yes, very much it was discussed in during the last council year itself, last to last council year itself. when there was a discussion on the authority of the publication of the ICI, and I very seriously remember that you pointed out that in the council, and it was very nice of the president to refer it back to the board, relevant board, AAASP that time, to tell about the authority of the publications of the ICI. And there was various group discussions out there, and then after discussion with AASB, it was presented before the ICI council also. And what has been said into the guidance note for the financial statement for non-corporate, because certain questions have raised there, the wording is same which is there in that letter for the authority for the publication. And guidance note, we in a general layman language say it is mandatory in nature. And in fact, if I talk about, if anyone feels that they have a different view than the guidance note, then they have to document that what is the reason that it is not to be followed as per the guidance note, and then we have to report appropriately as per the applicable auditing standards. So this is the guidance which has been given by the council. So in fact, if we talk about, if anything, if you see this guidance note on tax audit, the most I remember was in 2014, and thereafter it was revised after quite some time. But believe me, even if you see the 2014 guidance note, very beautiful, lot of things mentioned. It has been taken this in the 22nd edition, 23rd edition, and the 25th edition, everywhere, that whatever has been said that, okay, you have to do, this is reporting of SA 700 and all those things, that hard copy is to be given, everything is there since 2014. Many of the members are thinking that something new has come. It is not new. When Sanjay Bhai did in way back, and since that time it is continuing. So guidance have been given. Members, if you know what happens, Piyush Bhai, I normally say that you keep on crossing the red light and challan is not cut, and you feel crossing of the red light is the law. It is not that way. It is not that way. Not much upon that. Let us continue further, please.
Correct,
Thank you.
sir. Very rightly said, Pramod bhai and Sanjay bhai. In fact, there are judgments to that extent whereby courts have held that, for an example, I always take off a definition of turnover, which has not been defined in the Tax Act. And high courts have held that if the turnover is not defined in the Act, and if it has been given in the guidance note, which is made by body of experts, that's who are the experts in the accounting and auditing, I think so the assessing officer should follow that, and there's no reason why it should be. So that's why our guidance note issued by institute are placed at higher pedestal, and therefore you should follow. Of course, now when I'm talking about guidance note, Pramodji, I'll take a clue from a very first question. I just want to relate it, though it is, I think so Vishnu Bhai would have taken it, but there is very specific questions been asked. Now, that is again on your guidance note for the format of financial statements of non-corporate assessors. And we know, as a Central Council member, you were there last year when this were designed. I think so nobody can be best than you to answer this. People are asking that if the generally format should be prepared by the assessee, obviously that is auditee, my client. And if they do not prepare, and I have to issue an audit report in the format, in whatever format they are giving me the financial statements, what is my duty in such cases? And I would be very specific, Pramod bhai. People are asking, should I make disclosure? Should I qualify? What should I do in such cases? Pramod bhai, can you throw some light for the benefit of members?
No, Piyush Bhai, very aptly asked this question, and this is very important for all members to understand. Many a time members feel that why it is required, why we should give, and all those things, it is their requirement. If you talk about accounting standards, which came in 1987, first time mandatory, and then 1991 was for the first major year where accounting standards were made mandatory. By whom? By ICI. On whom? On chartered accountants. Since then, all accounting standards are applicable on the proprietorship partnerships also. If they are not complying, then auditor has to report appropriately as per the auditing standards. Now, suppose I'm talking about Piyush Bhai, a very simple thing. Proprietorship partnerships, they're not providing for the gratuity. In the accrual basis, how that will reflect true and fair view? Is that AS 15 brought in by these guidance note for the formats of the financial statements? No. if we talk about giving previous year figures, it is there since year 2000 through the framework for preparation and presentation of financial statements. Merely if we are not giving, it doesn't make that, again, as I said, crossing of the red light, then you don't get challan and you see that becomes the law. That it is mandatory since year 2000. So what these formats for the non-corporate guidance note has brought in, they have compiled basically all the applicable frameworks and the accounting standards and bringing in a format to standardize throughout the country. So from that perspective also, and again being a guidance note, members should ensure that whether those financial statements which are prepared by the assessee, are they in compliance with the framework, with the accounting standards? These formats actually get all those frameworks and the accounting standards complied. Sumoto. Otherwise, they have to take a call that only is it the format or the framework and the accounting standard and the other regulation, like for example, MSMED Act, which Sanjay Bhai would be taking. So it's a non-compliance. It is there in the act. So when you are not doing, how to report? So from that angle, Piyush Bhai, these formats are for the benefit of the nation, for the members, for the industry. So they should comply with that. Thank you.
So correctly, Sanjay bhai, would you like to comment upon this? Again, it's a very important subject of general interest, sir.
Actually, I fully agree with the Pramod Bhai that non-corporate are now mandatory so far as the guidance note is concerned. However, still, since everybody knows that preparation of the financial account is the duty of the auditee itself, and it is not the duty of the chartered accountant. What I say that we should pursue with the clients, because this gives a standard reporting. This gives a lot of other information which is useful not only for the income tax department, but this is also to be used by the stakeholders. It can be used in the bank when you present such a nice statement. The banks also, then other authorities, if you are applying in tenders, etc. So I think the AASB and ASB has issued a FAQ regarding this, and there they have provided the guidelines, and they have said that if at all it is not there, then it can be given as an observation, and this may not be equivalent to a qualification. So this is what my intake on this. You can't stop anyone from forcing them to make in this, but since the clients we are auditing, they are being appointing us, so we can force by persuasion, not by force of law, to prepare them. And we want to see that out of around 28 or 30 lakhs of tax audit report, at least 95 or 98% audit report should come in video formats. That is what our expectation.
Yes, thank you very much. In fact, Sanjay bhai, Pramod bhai, I think so. Even the lot of government bodies like income tax department, they are applauding our this guidance. That yes, you are coming with a fixed format, and that format will help them, those people also to compare assessee to assessee particular position also. And that's what idea of an Institute of Chartered Accountants of India is also there. I believe FAQs clarify on this, that adequate disclosure may be made in this regard, or if required, they may comply with SA 700 if sometimes qualification arise. That's what broad principles has been said. So I think so that clarifies. I'm just taking it one more forward before I go to the Vishnu bhai. Yes, yes. Sir.
Question number 5 of that FAQ.
Question number 5 of that FAQ, you may refer that. I think so. If anybody has no clarity about it, you may please refer to the question number 5 of the FAQs, which clarifies that what they are expected to do in case the formats are not been, if the financial statements are not given in the format by the auditing clients. Now, let us take a one step forward, because this time there was a lot of discussion when we were preparing this guidance note also. I'm not going on to tax question here, and thereafter I'll go to Vishnu bhai when he will start taking tax questions also. Form 3CD, there is always a feeling that Form 3CD has to be prepared by a chartered accountant. I wonder, I don't know how much, a lot of members feel that because they may be helping the assessee. So question is, who has to prepare Form 3CD? what is the role and responsibility of chartered accountant to that extent, and what is his responsibility as far as audit report is concerned? If briefly, because I'm going to basics, but it is very important. Basics are always important. Pramod bhai, over to you.
Piyush bhai, very, very nice question. And again, it is again guided to the members, not in the recent guidance note. It is there since 2014. Last I read was 2014. That the basic responsibility to prepare and give the detail of TCDs of the assessee. And the requirement of the auditor is to verify that 3CD. So auditor report is my 3CA or 3CB. Assessee has to give all the particulars of 3CD, and that's why we get the 3CD signed from the assessee also. You know, in the format it is not there. We have represented to the CBDT a few times, but they are in the process of thinking about that. But in our guidance note, since now more than I would say 2014 I am talking about, it has been clearly mentioned it is the responsibility of the assessee to provide and prepare that information of 3CD, and the auditor has to report in 3CA or 3CB. Hence, 3CD has to be signed by the assessee also. It is there since so many years.
Very, no, but lot of questions do arise. There is always a debate on this, that who is responsible for preparing of Form 3C. I think so. Sanjay, if there's anything to on this,
before Sanjay bhai says, just one point more. Sir, I fully agree that it is the responsibility of the assessee, but we have to take care. Whatever is required to be given in the 3CD should be given. It should be given. I hope I am making that very, very clear. Right. Thank you. Sanjay bhai, sorry.
Sir, so like old income tax, we are again adding a provision to it.
Yes, sir.
Yes, Sanjay bhai.
Actually, Pramod bhai, I agree with you this, that the responsibility time and again has been said as of the assessee. But if you see the process which is the income tax department is following these days, that we have to upload it and the client has to approve it. In fact, it should be the reverse one. The client should upload it, 3CD, we should upload the 3CA, 3CB, and also approve the 3CD. But the process, since it is as on date, is that the uploading is from our side. We should ensure it that a physical copy of 3CD is also taken from the client, and we should also see to it that even though it is the responsibility of the client to upload the 3CD or give the 3CD format, but it should have complete information. So a matter of caution, we may say that we may take a draft 3CD form from them. And if they are not complete one, so we should refer back to the client before we upload it from our account. So this is what, because 3CD contain 44 clauses and sub clauses also. A lot of information is being there, and the responsibility of those information is also on our head. So at the same time, appreciating that 3CD is to be approved by the client also, and 3CD is the client responsibility. We should not accept any 3CD which is not proper and which is incomplete, or you may say contains most of the clauses as not available there. So these are my intake on this particular point.
Yeah. So basically what we are trying to say is, of course, Form 3CD is preparation is the responsibility of the SSC, but at the same time, when we are doing verification thereof, and if we feel that it is not appropriately disclosed or reported as required by the Form 3CD or as required by my guidance note, we should guide the SSC or the auditee, I would say, that please rechange it. Please incorporate all these factual requirements which are required by my guidance note and Form 3CD. And if they are not doing that, then only option left with me would be to report in my audit report, which is Form 3CD or maybe 3C 3CA and 3CB, sorry, for that matter. Yes. So I appreciate that. Yes, Vishnuji, we would like to comment on this, something, any of your views, sir, before we go to the actual tax questions and we start.
The only I give one disclaimer because you have not made any disclaimer.
Right.
Since we all 5 Central Council members are here, so these all the views are from our individual views and not the view of the institute. So people not understand that these views are the institute views. All views are our panelist views from our individual views and not the institute views. And
Right.
now we take the actual text question from the participant.
Yes, please,
So
Vishnu.
Pramod ji,
I think so. Pramod ji
are
is
you available, sir?
uh, Pramod ji is,
No.
I think so, he was in between, was supposed to change the screen because he has to travel to airport also. I'll
Yes.
just, before we come to Pramod ji, I'll just take up one question meanwhile till that time, Vishnu ji.
Yes, yes.
I'll take it with Sanjay bhai and I'll go to a very important clause number 22, which deals with MSME requirements reporting under section 43BH. And it's a very important, lot of questions arise. Maximum questions are on clause 22. And this clause 22 was also revised by the latest form 3CD also. This clause 22 MSME requirements, it says we have to certify the payment made to all MSME registered dealers during the assessment year. It is very, what does the member has put the question? It is very difficult to verify MSME payments within stipulated time. Its disclosure in notes to account sufficient compliance under clause 22 of MSME requirements. Since he has to verify and disclose all the payments, member is asking it is very difficult. Can I just clarify that into the notes and that would be sufficient compliance, Sanjay bhai?
I would say, Piyush bhai, in way that, as you know, in the income tax bill, time and again, the exchequers have, the lawmaker have reposed their confidence on our profession. And as such, we should not run from any responsibility. If it is difficult, it is all right. All those difficulty, we must adhere with it. But it is not impossible. The software has come, they have allowed the import of the data and then the compilation of details. The only thing is that we need to take care identification of the parties. So, for example, if the bills doesn't contain those information, the voucher doesn't contain those information, then we need to take the management representation letter and we should take the list from the client also. And at the same time, if it is possible, as on today, though there is no site which provides the details. For example, a proprietary form, if there is no GST number, then you will not be able to even get the PAN number. So if there is no PAN number, so there is no verification of the GST number, and GST number contains the part of the PAN number also. And if you have a PAN number, then there are MSME site where you can verify about the registration. But in any case, we should not run away from our responsibility. If it is impossible, the client doesn't cooperate, etc. So we may give a suitable disclosure and modified report. If it is there, then we can also issue. It depends upon the, you can say, what is the numbers, whether it is material, whether it is immaterial. If suppose out of a turnover of 100 crore, there are only 1 crore rupees of the payments which are related to MSME or which are subject to concession, then it is immaterial. But if suppose 98 crores are from them, then in that case it becomes material. So we need to consider this thing while thinking of not giving those information.
Yes. So I believe the question was and around, Sanjay bhai very rightly said, somebody is trying to just put it into notes and wash it out and do not give a responsibility. But I believe proper audit procedures should be followed, Sanjay bhai.
Yes.
And tried, and there should be an effort made. We should convey the auditee that effort has to be made. Whatever is the process given in my guidance note also, that how an identification of an MSME supplier can be done, those should be done, I think so.
Yes.
And obviously, as we always discuss with even the income tax department also, if we try to run away from such important clauses, the trust has been reposed. What Sanjay Bhai is trying to say is that trust has been reposed in the chartered accountant. You just see the amendment which has come in income tax bill. That amendment has not taken place, which otherwise a lot of other professional institutions were trying to do it in regard to who can do an audit. This is because of such a trust. They know there are certain difficulties which are encountered in determining disallowance under 43BH, in giving data for clause 44 in relation to GST, and that difficulty can only be resolved by a chartered accountant. And if we try to run away from that, I think so we are putting our own skin in difficulty. Tomorrow somebody would question that the purpose has not been served with the audit. So I think so Sanjay Bhai has very rightly said that obviously we should make an effort, we should explain auditee, that we should respond to it. Vishnu Bhai, would you like to come in? I think so Pramodji is also there in between. I'll try to mix up the questions in between.
Yes, this is MSME. This is very important issue, because the government has taken this issue before 2 or 3 years. And why this clause has been introduced in the 3CD? Because to boost up all the MSME, and if we chartered accountant will run away this particular clause, so it is the very hard cost to the all the MSME and the small business provider and services. This is very important clause which Sanjay Bhai has discussed. Sanjay Bhai, lot of our participant, our Pramodji, you are on the online, sir? Pramod,
I am there,
yes,
sir, I am there.
Yes, sir. So this question is to you, sir. Pramodji, lot of our participant has asked this particular question: how to report transaction relating to corporate social responsibility (CSR) expenditure in the Form 3CD? How to report transaction related to CSR expenditure in Form 3CD?
Vishnu bhai, it is not that all type of expenditures or incomes are required to be reported in 3CD. There is no specific clause mentioned in 3CD to report CSR activities, so it need not be reported out there in 3CD. There is no specific clause.
Yes,
Not
yes.
required. Just like
Not
a very simple example. Suppose a person has sold an agricultural property. So if he has sold an agricultural property, that is not a capital asset. So there is no exemption. So if I talk about in my ITR, I want to show, but there is no legal column where it is required to be shown. No, for everything there is no requirement. So if there is
Yes,
not
yes.
required, it need not to be shown.
Yes. So one more question, sir, I ask to you before going to Sanjay Agrawal ji from Piyush Chhajer ji. If client is taking loan from other than financial institution through bank account, for this transaction, do we require to report in tax audit report under clause 31A of Form 3CD if such loan amount is more than 20,000? I repeat this question, sir.
Yes, sir. Yes, sir. Yeah, Vishnu, I've got what you are
Yes.
saying.
Yes.
This is basically reporting for loans taken otherwise than by cash.
Otherwise,
So 269 SS, 269T. So
yes.
if any loan has to be taken, even apart from financial institutions or banks, that is to be reported out here. And now this year, the 3CD, they have made a change.
Yes.
They have made a change for acceptance and the repayment thereof, where they have given drop downs. They have given the drop downs that which is the mode in which it was received or paid,
Yes.
whether it is a journal entry or transfer entry. So earlier there was a problem that suppose a loan was converted into equity. So is it a violation of 269T? Legally, yes. But of course, the penalty would not be applicable because that is a genuine transaction. So how
Yes.
to intimate that? So now they have said, okay, conversion to equity, journal. That thing has been done good by the department now. So that is good one. So yes, all loans are to be reported. All loans and the specified advance, which is for the immovable property, all those have to be reported.
Sanjay Bhai, on this view, you want to add, sir, something?
I fully agree with him that the requirement of the law is absolutely clear. Other than non-specified loan, we have to give, specified loan, we have to give the details.
Thank you, sir. Piyush ji?
Yes, sir. So, of course, going back to 269 SSN, CSR, packing that for time being other questions. I again want to come on to an MSME again. Uh, Taken a situation, there is an identification of MSME and there is a delayed payment also. Now, if you see the clause 22, first limb of clause 22 says that you have to give details of interest. How I need to report over there? And what happens if there is no interest provision made in the financial statements by the auditor? So what I have to do in such a scenario? Sir?
Actually, the reporting, if you see into sum and substance, starts with the amount of interest inadmissible.
Correct.
Under section 23 of the micro, small and medium. So if there is no interest, which is as per section 23, means the delayed payment, and not only the MSME, but MSMED in medium also, we have to report. Now here what we wanted to say that if no interest is being debited, that in clause 22(1), you are not supposed to report. However, we need to see this, that if the amount is so substantial, as I said earlier also, it is the materiality which is important. If it is so huge, because for example, in clause 44, we are supposed to provide the details of the GST, whereas there is no connection with the disallowances at all. So the department or the authorities wishes to gather certain information, even though it is not directly impacting their taxability. So we need to look into this from the materiality point of view. If it is very, very substantial, then we should give in our observation that this amount has not been provided. And if it is possible, then the client should provide at least in the contingent liability.
In the contingent liability?
Yes,
okay.
At least.
Because there is no provision made and the liability may fall upon them under the MSMED Act. That's what you are trying to say. So precisely, inadmissible will arise, if understood correctly for the benefit of the members, inadmissible amount will arise only if I've debited something to a PNL.
Yes.
So a responsibility of a tax auditor is if something is debited in nature of delayed payment to MSME as an interest, then I have to report over there. But since it has not been made, any provision, reporting do not arise as far as 3CD is concerned. But appropriate audit report qualification will still continue.
Will still continue.
Depending upon materiality. Right. Materiality. So my auditor will have to actually calculate in any particular case. So if he has to effectively discharge his function, he need to verify and calculate. That's what he has to do.
Because the financial should contain about the notes also, and in notes, even though it is not required, the reporting of 21 clause, where contingent liability, we have clarified that you have to give only if it is debited in the P&L account. Then that is disallowable. Though it is not written in the Act itself now, 3CD, but we have given the guidance like this, that if it is, because a lot of adjustment under section 143A1 have been made about the contingent liability also. People have copied the contingent liability from the notes to accounts. So this is what, that is why I say that the interest has to be covered in the contingent liability, at least if it is not provided.
Correct, sir. Correct. So they will have to do the working in the memoranda to ascertain, even if the provision is not made, your audit procedure does not stop over there technically. There may not be reporting in Form 3CD, but they will have to work out memoranda that what is an implication of that interest and decide upon its qualification, contingent liability. Right, sir. One more thing. Now,
yeah, Piyush bhai, just to supplement here.
Please come with it.
There are two things out here: tax audit of a company, or tax audit of a entity where 3CA is required, and tax audit of an entity where 3CB is required. You know, when we talk about 3CA, then its audit report is totally different. Its note to accounts are totally different. So in that case, one has to ensure that in notes to accounts, there is a requirement under the MSMED Act to give particulars as required under section 22 of the MSMED Act. the five items which are required. So that is invariably required in all financial statements in the notes to the accounts, which includes the principal, the interest paid, interest payable, everything. It is required. Since 2008, it is required. So in case of an entity where 3CA is required, that qualification based upon what Sanjay Bhai said, materiality would be there in the audit report as well as 700 out there in 3CA in the financial statements. In that case, for the interest in 3CD, where 3CA is issued, there would be nothing else except if the interest is provided for, which is disallowable. In case 3CB is issued, like for example, proprietorship, partnerships, right? In those cases, because the financial statements are audited under the Income Tax Act, so in 3CB, financial statements are also audited out there. So in that case, what Sanjay Bhai said, for if it is material, then yes, you have to report even in 3CB, para 3A, for the true and fair view effect, for even interest not provided in the books of accounts. Just supplementing that. So one has to take care accordingly. Just wanted to add that. Thank you. Thank you.
Right, sir. Thank you very much. Rightly said. In fact, Vishnu bhai, I think so. There was one more question also. In general, somebody had asked on contingent liability also. If it's with you, if you can just take it that.
Yes, yes.
Yeah. Because he was discussing on contingent liability also.
Yes. So you are taking this question, contingent liability?
I think
Yes.
so. Yeah, it was saying that somebody has asked, in one case we have reported contingent liability, both in Pramodji, just listen if you can this. In one case, we have reported contingent liability both in ICES and 3CD. While processing the ITR, same amount has been added and additional liability of tax imposed. How we can avoid such situation? Intimation generally comes in assessee mail 143-1A and timely response not done. Now assessee has to go to appeal, and you know the status of CIT appeal cases. So what he's trying to say, of course, I'm not going into 143-1 and CIT appeal. Question is, he wants to answer that I've reported contingent liability. Let us take this interest. Maybe this interest, what Sanjay Bhai is saying. If I report in the contingent liability and 3CD, the processing under 143-1 is calculating some tax liability and making adjustments. So what should I do when I report in my tax audit or my notes? How can I overcome such situation?
Piyush Bhai, Vishnu Bhai, Sanjay Bhai has already answered. I'll just reframe the answer out there. We have the questionnaire, the person who has asked the question has asked two things. One is regarding ICDS, second is my contingent liabilities clause 21. Now, if I go to the ICDS, there is no adjustment required, because in the ICDS, if I talk about, that is ICDS 10, there only the disclosure is required for the movement thereof. So there is no adjustment required, because contingent liability cannot be booked into my financial statements. Only the provisions can be done. So as rightly said by Sanjay Bhai, already clarified in our guidance note earlier also, and since also, that contingent liability we have to only fill in clause 21 if it is debited to the profit loss account. You have claimed an expenditure, then that's why that is disallowed.
Correct.
So might be that in that case, the assessee, what he has done, that in 3CD also, just to over comply, he mentioned there also contingent liability, and also in clause 21.
Correct.
Unless it is debited to the profit loss from the notes to accounts, it will not go. It has been clarified so many times by TAQRB, by DTC, by the guidance note. So members have to actually, they should read the tax audit guidance note as and when so many years it has been issued. Beautiful. I'm telling you, it is very beautiful guidance note. If you read, lot of concepts would be cleared. A lot of concepts would be cleared.
So
Thank you.
very rightly clarified, Pramodji. Yes, we have often seen that people also include in that clause 21, which actually talks amounts debited to profit and loss, which is the nature of contingent liability. So it's not a crystallized liability, it's a nature of contingent, but you want to debit to P&L and claim some benefit, then you have to report that. Not a regular contingent liability which has not come to P&L itself. So it takes care. Yes,
I will just add
yes,
something.
Sanjay. Yes.
Actually, Piyush bhai, if we go to the original 1985, our 3CD form, the clause 21 was basically for the disallowances.
Okay.
And when it was revised and finally the clause 21, if you see the strict interpretation, it is not saying specifically not debited to the P&L. The clause 21G says contingent liability. But so far as other 21A, B, C, D, they are talking about the debiting and also about the identifying the expenses. So specifically, because a lot of disallowances have been made and 143(1) adjustment have been made in the past, and it becomes cumbersome for the SSE that a chartered accountant is fulfilling his responsibility by filling up from the, you can say, plain reading of the section. So clause 39(1) of this guidance note, 39(1), we have specifically said that this is in relation to debited to the P&L. Okay. This for the purpose of benefit of the members, in the present guidance note, it is in page number 193. So we have to be careful about it. No contingent liability we have to report which is not debited to the P&L account.
Right. So member may please do look into the guidance for the guidance on this very specific question, how reporting has to be done. Vishnu bhai, over to you for the next question.
Yes, sir. Sir,
Yeah.
this question is very important question, and my both the panelists from Sanjay ji and Pramod ji, if future and option turnover is between 3 to 10 crores and SSE has having loss, whether tax audit is applicable or not. In the derivatives segment, future and option turnover is between 3 to 10 crore, and I can say more than 10 crore also, and having the loss, then the tax audit is applicable or not, Pramod ji?
Vishnu bhai,
Yes.
you know, in the question you have given a googly, because you said once you said 3 to 10 crores, then even if he exceeds 10 crores, the situation is different.
Yes, yes, yes.
I'll give you the reason. If it is between 3 to 10 crores, you know, in the future and options, every transaction is basically through my computerized modes, NEFT and RTGS.
Yes,
so there is
yes.
no cash movement. So my limit is 10 crores, but I would be very surprised if a person is having future and option of 10 crores, future and option turnover of 10 crores, which means gains and losses aggregation. Very few would be having, very few would be having. Yes, if it is below 10 crores, even if it is a loss or gain, there is no requirement of a tax audit. For tax audit, you have
Yes.
to only see section 44AB, the 5 clauses, A, B, C, D, E. Does it fit into any of these A, B, C, D, E? If it doesn't fit, no tax audit. Now, the moment it crosses 10 crores, then it is covered under 44ABA. There it says if there is no cash received or cash payment of more than 5%, then my tax audit in the case of business turnover limit exceeds from changes from 1 crore to 10 crore. So if it is 10 crores and above, then audit is required. Below 10 crores, not required. This we are talking all of us are talking about for assessment year 25-26.
So you mean to say no net loss or net profit will be taken, whole turnover is taken for the considering of the tax audit report?
Yes, sir. Yes, sir.
Yes. Sanjay bhai, your view, sir?
Actually, I fully agree with Pramod bhai. Basically, if you see the clause number 8, as Pramod bhai has said, clause number A, there are concerned about A, B, C, D, E, and the third proviso. So the conception that above 1 crore and there is a loss, it means it is less than 6 or 8%. That doesn't arise at all. If it is exceeding 1 crore, but it is covered within the proviso that the transaction of 5% are less than in cash, both in sale and the payments on receipt also, you need to check the proviso of the 44AB. In that case, you doesn't have any tax audit obligation. Please be careful that the similar columns are provided in the income tax return form also. So if you are not doing the audit, because so many notices have been issued in the past, if your turnover is more than 1 crore and you are not ticked the column in the ITR form, then you may be subject to some notice about the non-compliance of the tax audit. So be careful. If you are not doing the audit or your client is not doing the audit, then you must tick the format where it is specified that tax audit is not applicable.
Thank you, sir. Pramod bhai, very important question, and so many of our members are confused about this. Whether 44 AD limit is for year to year. For example, if SSE has opted 44 AD in the assessment year 22-23 and his turnover is exceed in the assessment year 24-25, whether again he can opt for the 25-26 44 AD?
Yes, Vishnu bhai. Once an SSE has taken 44 AD, then he has to take it for 5. Now, suppose in the first year, as you said, his turnover was below 2 crores and he has opted for 44 AD. Next year, says his turnover is 5 crores. So he is not having eligible business. So in that case, because his turnover is exceeding 2 crores and 3 crores, so not having eligible business, so he is not eligible to opt for 44 AD. Next year again, because he has to take for 5 years, his turnover again goes below 2 crores. So he'll have to opt for whatever AD. If he doesn't, then of course the audit would be required and all those other conditions would be there. So yes, he has to.
So in assessment year 25-26, he is obligatory for the TDS because TDS is based on the last year figure.
TDS, Vishnu bhai, is not based upon audit. TDS is based upon previous year's turnover.
Yes,
Now,
previous year
if
turnover.
in the case of individual partnership firm, the TDS is from the first day.
Yes,
So in the case of individual HUF, if my turnover in the previous year exceeded 1 crore, TDS is applicable irrespective of it is 44 AD or not. Even in 44 AD, it is required.
Yes. Yes, Piyush bhai.
So, what Pramod bhai is saying, I think so, Pramod bhai, what the confusion is there, which I could determine from the question is, so if I had a turnover of 2 crores, I opted for 44 AD, and thereafter I was not eligible because my turnover exceeded 2 crores, for an example. Now it again comes back. So technically, the question in the people's mind is, does it amounts to opting out? Because actually I am become an ineligible, so it will not amount to opting out, and I will not be covered by 44 AB subclause 4 and subclause 5.
Yes, very rightly put. Very rightly put.
So if my turnover, I would be only opting out if my turnover remains within the eligible criteria, that is below 2 crores, and still I do not offer for 6% or 8% as the case may be, and I offer basis actual profit, then I can't go back. That's what I understand. Then
very rightly said, Piyush bhai. Just to add, just to supplement, not only increasing turnover. Suppose he has commission income. Next year he has commission income, so he is not an eligible SEC. The section is not applicable to him. He is not opted out. It is not applicable. In the next year he doesn't have the commission income. Again, whatever AD applies. So yes, the section is very interesting. Year to year, someone says you don't need a chartered accountant. Actually, you need a chartered accountant when you are having
to determine every year. Right. Yes, Vishnu, over to you again.
Yes, very important question. Sir, in case of the multiple business, because when we are preparing our guidance note, that time we are also confusing, and so many people ask this question. In case of the multiple business, how should aggregate turnover be computed for deciding tax audit applicability? For example, if any person is having 5 rights, sir. Sanjay bhai, you want to add, sir?
Piyush bhai, Sanjay bhai, yes. But double aa gaye.
Very rightly said by Pramod bhai. In fact, see, once you are certifying financial statements, whether tax audit applicable or not applicable, you would be doing for particular purpose, maybe special purpose also. You have to follow your guidance not issued by ASB, AASB, and also all standards will apply. That's true. So that financial statements once bears the seal of a chartered accountant, it should be in that format precisely. That's what is the global. So yes, so that's one thing to it. Shall I take up something, Vishnu bhai, again with Sanjay bhai?
Yes.
I'm inclined to go to MSME always.
Yes, Piyush bhai. Yes, Piyush bhai, you take, sir.
Yes, sir, very important question and relevant. Again, it is an MSME. the member has asked a very specific question. Is capital expenditure required to be reported under MSME clause? Now, first of all is reporting and then is disallowed. I think so. Both questions, Sanjay bhai, you can answer to it. Obviously, he has just said to be reported under MSME clause, but we have a different clauses for that particular purpose. Over to you, Sanjay bhai.
You see, capital expenditure and revenue expenditure. This is the distinction for the purpose of the claiming. So far as 40A3 is also was there also the same question comes, whether the capex is to be reported for exceeding the limits, because the disallowances may differ, the amount may differ, because in capital capex, if suppose you have done the expenditure in cash, then only depreciation may be disallowed. However, if you are doing for regular revenue expenditure, the whole amount will be disallowed. So similar analogy we can take here, and we need to see this, that both capital and revenue expenditure, there is no distinction been made by the exchequer. And I don't know very specific about it, but when the question of disallowance will come in clause 3 and say clause 3B, then the observation has to be given that the amount per se gross is something else, and if suppose depreciation is claimed, it is a lesser amount that can be disallowed here. So this is what because the debited this is not debited to the P&L.
Revenue. So
Yeah.
there is, so practically there is no disallowance.
Yes.
That's what Sanjay bhai. So my clause 22, 2 and 3, if you see, it says total amount required to be paid to MSME. It does not say whether it is paid for in nature, revenue or capital. But out of that amount itself, I have to give a breakup, which is paid within due date, which is paid within time, and one which is not paid within time. So I believe out of that amount. So if my numerator, I would say, or the clause 2 does not include the total amount of capital expenditure, it will not come below also. So I think so that's what our guidance note is also supporting that view on that. So I think so members can refer to that for that purpose.
And
Yes. Yes, yes, Pramod. Yes, Pramod. Pramod, I'll come back to you.
Sir, here, if I talk,
yes, please go ahead.
In clause 22 talk about, in clause 22 about, one is interest.
Sir, your voice is not clear, sir.
In my clause 22, if I talk about, my first part is interest and rest 3 are about my payments.
Correct.
So in the payments, there are 3 clauses. So the first one is talking about payments to any MSME which is required to be made during the year. So
Right.
here, everything, capital, revenue, everything would be there. Second one is paid during that, within that period. Again, there it would be there. But the last one, which is talking about disallowance, the disallowance of any expenditure would be there only if an expenditure has been claimed. So there only revenue, and depreciation is not an expenditure, that is an allowance. So in my last one, if it is pending beyond that 45 days and it is an expenditure claimed, then only it will be disallowed. That is to be reported out there. It is there in our, I suppose, guidance note also. It is same way only. Pankaj Bhai has joined, so his view can be taken also.
So thank you, Pramod Bhai. I just for it's given in the guidance. My request to members is to please follow the guidance note. It's very clearly, and I as always says it's for the benefit of the members. If anybody is putting question why you have taken this decision, you can say I followed the Institute of Chartered Accountants of India. So maybe you may have some different views also, your personal views you may follow. For the benefit of panelists, currently 6,000 members are listening to your answers, just for the benefit of members. And now I would also welcome Central Council member Pankaj Shahji. Welcome, Pankaj Bhai. As I had introduced you earlier also, is coming from Indore. He has just joined. He was busy with some other webinars. He keeps delivering lectures, and he is now, as I said, अभी हमारे अर्जुन भी आ गए काउंसिल के डायरेक्ट टैक्स के अर्जुन, भीष्म पितामह कृष्ण भगवान तो थे ही, Arjun has come, who has to.
Thank you.
So I'll just take liberty from Vishnu Bhai, and I'll just now first give little rest to Pramod Bhai and Sanjay Bhai, and I'll go on to Pankaj Bhai. Pankaj Bhai.
Yes, sir. Please tell me.
So Pankaj Bhai, we have been discussing tax audit applicability.
Yes, sir.
And important, of course, we have discussed certain. I think so. There's some disturbance. Yeah. So we have discussed upon certain applicability of 44 AB and AD. One relevant question which came is in regard to real estate developers. What it says is, I'll just read the query of the member. Applicability of tax audit for real estate developers, where milestone-based invoices for under construction flats and records the amount received as advance from customers under current liabilities. Corresponding construction costs are capitalized to inventories. No revenue or related expenses are recognized in profit and loss. So generally, a real estate company does not, whatever amounts he received during construction shows as an advance amount and expenditure as CWIP. So I think so what is trying to say, my P&L does not show any revenue. So what happens under section 44 AB in such cases, sir? Pankaj Bhai, am I clear?
Piyush Bhai, in such cases, unless it is shown as revenue, it will not be considered for applicability. Any amount received as advance will not be my income and will not be considered as a turnover for deciding the applicability, in my own view. It has to be my revenue. I have to recognize the revenue. Only advance received is my liability. That can never be considered as a turnover.
Okay. And expenditure which I'm routing through profit and loss account. Of course, generally I'll debit expenditure and then I will show closing stock. Am I right? So I am
yes,
sure
absolutely. So expenditure will also not be considered as my turnover.
In work in progress.
In work in progress. So that will also not impact my audit.
No, not at all. It will not be considered for determining my applicability.
Because this is of very importance, and there has been always people do an audit. Why wait to do it? I would not do an audit. Let's take in a project which has a gestation period of 5 years. I'm doing construction activity for 5 years. I do not do an audit for 5 years. In the 5th year or 6th year, when the project is getting completed, I would book revenue. Should I do tax audit only in that year? And then what is the responsibility of my auditor for those opening balances? Could you throw some light on that?
See, whenever I am recognizing the revenue, I am only required to do tax audit. It depends whether I am following percentage of completion method or completion method. If it is percentage of completion method, then as and when I recognize the revenue, I have to do tax audit. But if I am following completed contract method, then as and when my sales are executed and when I am booking the revenue, turnover is that and tax audit will be required only in that year.
Right. So in the last year, when I actually book a revenue, at that moment, when I do an audit, do I need to actually look into what has been opening balance of CWIP? Should I audit those transactions? What will happen to those? Will always miss the reporting? Am I?
Absolutely. See, tax audit will be applicable only for that year. However, if we feel that there are some adjustments or something related to opening balances, we have a standard on auditing specifically for that. We can give disclaimer if we feel that opening balances, we have some doubts in opening balances, we can give a disclaimer. Otherwise, for tax audit perspective, we have to consider for the year under consideration.
In my view. To say something.
Pankaj Bhai.
Yes, sir. Yes, sir.
We need to take care of this thing, that any allowance which is not allowable as per law, whatever accounting method we are following, the year in which we will capitalize or will claim as expenditure, we need to verify those expenses on the basis of the allowability also. So for example, if suppose, otherwise this will become a tool. For example, if I have made cash payment under section 48(3), and now those cash payments have been made, let us say in year 21 or 22, but I am capitalizing or I am completing my project in 25. So while making the disallowances, we must mention, since that has not been claimed in that as previous year, but in any case that expenditure has been claimed in that period. So relevant clauses, we must show the disallowances. It should not happen like this, that assessee may, you can say, escape the the normal disallowances, TDS disallowances, etc. Because TDS disallowances will apply. Since the tax audit report is not being uploaded or tax audit is not being done, that doesn't mean that the things which are normally disallowable should be, you can say, because of completed method of accounting or a percentage completion of method of accounting, that should be taken care. So specific provision has to be taken care. This is my view on it.
I appreciate your view, Sanjay bhai, which is a pro department
Very good.
perspective, I would
Yes.
say. But
He will
as
have-
far as auditing is concerned, first of all, I need to see my accounting, and accounting is important. My balance sheet and P&L should give a true and fair view. That is my first perspective. As far as reporting of something which is opening balance, unless there is a specific clause or reporting requirement, I am not required to report on this. That is my personal view. If I may have violated some provisions, but that is in earlier years, and in this year, it is an allowance, not an expenditure. Then probably I am not required anywhere to report on these cases. This may have escaped the government's reporting requirement, but presently, since there is no reporting requirement on such opening balances, we may take a view in this regard.
Right, sir. Right, sir. So, of course, leaving it apart, there's obviously I understand what Sanjay is trying to say, that when you are claiming an expenditure in the 5th year and your non-compliance had happened in year 1, year 2, when it was not subject to tax audit, you were not claiming that expenditure. If it is to be disallowed in year 5, you report. If you are of the view that it will not be disallowed in year 5 because it was incurred in year 1, then you did not report it. I think so. That could be balanced. That could be a balance.
You
So-
should not claim also.
Sanjay bhai, we may have a different views
that
as
is
far
fine.
as allowance of that is concerned in year 5, whether it would be allowed or not allowed. If it is a disallowance and if there is a requirement specific in Form 3CD where I have to report inadmissible amount, I will report it. But if there's, let's take an example, TDS not deducted. If I have to report inadmissible, I may, and if I'm of the view it is inadmissible, I will report. But I will not report in TDS non-compliance in this year because non-compliance has taken place in year 1. That's what I think. So we'll try to settle it over there.
Piyush bhai, take for example.
Yes, Pramod.
Pramod bhai, just I would like to add one thing.
Yes, Pramod.
बोलो पंकज भाई, आप बोलो.
Sir, what I would like to
I was
submit.
just supplementing Pankaj bhai.
Yes. We have section.
I was just trying to supplement Pankaj bhai.
Okay.
Yes. Pramod bhai. We
48,
have section
48.3A.
Yes. Similar
3A.
example where the legislature intended to cover opening balances, they have come out with a specific reporting requirement and provisions. So therefore, in absence thereof, we have Westminster and A. Raman and Company where there is no requirement as per letter of law. We may not. It may not come under the ambit of tax, and we may not require to report it.
I was also supporting that 48.3A. I was just telling 48.3A or 47 or 43, which specifically provides. So there, it can be on the.
Absolutely. So because there is a specific requirement in respect of opening balances, therefore 48.3A is there, and we are required to report. Otherwise, in my view, we are not required to report.
Yes. Right, sir. Very rightly, sir. My vice chairman clearly said, that's why I said those are personal views. It are not views of the institute initially. I abide by that. There may be difference of opinion. Institute in its guidance note does not take or interpret tax laws. It talks about the auditor's responsibility, and we are discussing an auditor's responsibility. Members may have a different view than the speakers also. You are advised to take a view based on whatever legal position, legal views, legal judgments are there. That's what would I can suggest at this particular stage. Sir, one more before I go to Vishnu bhai again, Pankaj bhai, because आप अभी हाथ में अभी आए हैं तो आपके questions में पकड़
Please.
Members were waiting for you. Is tax audit, one second. In case of LLP, cash withdrawals done by a designated partner for its personal use to be considered for cash payment of 5% limit for tax audit applicable. So what is trying to say, I am a partner in the LLP or maybe firm also for that matter. I do a cash withdrawals from the firm. So firm is technically making a payment but debiting to the capital account of my partner's account. Whether that cash, whether that should be considered, first of all, payment for the purpose of reckoning that 5% tax audit limit out of 100. So whether I'll get a benefit of turnover limit from up to 10 crores.
Piyush bhai, here I'll have a conservative view. I will go through my cash book, and in my cash book there are withdrawals. Even though for capital they are making drawings, then I would show conservative and consider it for 5%. So
Yes.
therefore, we should be conservative in determining as far as this capital withdrawals or withdrawals are concerned.
Audit apply करने में conservative है. Members
Yes, absolutely.
members bindas audit करिए and please charge properly. That's what you are saying. Yeah, you should be
Absolutely.
conservative when it comes to applicability of audit. Don't take
Yes.
risk of penalty of 1.5 lakhs. That's what
For
you should
applicability for TDS, I have always been conservative.
appreciate. Anybody? I think so. Sanjay bhai,
नहीं, here, Piyush bhai, I agree with Pankaj bhai without being conservative. Legally, it is required because through cash book, if I talk about cash book, it is a cash payment receipt. So it's nothing being conservative. It is a lot.
Yes, Vishnu bhai, over to you. Any specific questions, Vishnu bhai?
It's very oftenly this question comes in the course of the business promotion. Sometimes gold and coins are given to the clients. So TDS applicability on this particular provision, exact I read the question. In the course of the business promotion, companies often provide gold coins or gold chains to the customers upon achieving a specified purchase threshold. Give that such promotional incentive are known at the time of purchase and differ from lucky draws or contents. Are these expenses subject to tax TDS under the Income Tax Act? If yes, what are the implication and applicable provision? Pramod bhai.
Vishnu bhai.
Yes,
Yeah,
yes, Pankaj
yeah.
bhai.
These kind of incentives are income under 194R 28(4). They are not turnover. So for tax audit applicability, they may come under gross receipt, but they are not turnover. But as far as TDS is required, we have 194R for all these kind of incentives now. So they will be taxable, whether turnover or not. That is a debatable issue.
No, not from the turnover perspective. For the TDS perspective, whether the TDS has been deducted or not. Not for the.
Now there is a specific provision 194R for this. So in my view, TDS should be there. Pramod bhai.
Pramod bhai.
Yes, sir. Yes, it would be there. You know, there is some, I would say, issue out there. Point number one, we have to see the limit of 20,000 rupees, which is there. So if it is below 20,000, not required. Now, the question only comes when it is given to the distributors or given to the retail customers. Now, if we see the FAQ which has been given by the CBDT, there they have not differentiated. So even if it is given to customer, in my view, if it is exceeding 20,000 rupees per person, in that case, TDS should be deducted under 194.
Okay.
So same view of all the panelists in this particular viewpoint.
Yes, Vishnu bhai, this has some other aspect also. If it
Yes.
is as a sales incentive, then it will have a different color.
Yes.
So we need to see whether you are giving to customer or you are giving to your buyers of your scheme.
Yes.
Which are your regular buyer. 194R will come only in the cases of the small things, but in the case of the regular buyer, if it is given as a incentive or something as such, you have to be careful about that consideration.
For this
cash, again, for cash discounts and other incentive, cash items, cash discounts to the buyer, the exemption, though they say it is a benefit, but the exemption is.
And for this particular point, just I clarified for the pharmaceutical companies, the Supreme Court has clarified that all this type of incentive is not all expenses are disallowed. So again, one more question to Pramod bhai and Pankaj bhai. In case of the reporting of expenses as non-deduction of TDS under section 40A IA, should we mention complete expenses in audit report or only 30% part of the same? Pramod bhai?
30% amount inadmissible.
Yes, Pankaj bhai, same view, sir?
Yes, same view. Inadmissible in the amount required to be reported.
Yes, sir. One quick question, sir. Assets purchased by the director in cash above rupees 20,000 for company. Director is purchasing any asset in cash from his own pocket in more than 20,000 rupees for the company. How to deal this transaction in the company account?
Vishnu bhai, first of all, the limit is now 10,000. So we may
Yes,
make the
yes,
querist
yes,
aware that the limit
yes,
is now 10,000.
yes.
Now it depends how he brings. If he directly brings the asset in the company, then probably there is no disallowance. Then the accounting entry is asset to capital. Then it is not required. But how the accounting entry is routed is important.
Pramod bhai?
If it is brought as a capital first and then the asset is purchased, for example, I bring cash to capital and then asset is purchased, then there would be an issue.
In this case, only general entry will be passed because director himself is purchasing from his own money. And
so
then
asset to director, no
yes,
disallowance in my view.
yes.
Here the issue could be there. Actually, this is a bit controversial
Pramod
because
bhai's voice
ultimately
is
director will have to be paid now. So when the director is paid, that would be paid in check, not by cash. So these issues could be there. These issues could be there, but I have to be very careful and be a bit conservative, I would say, as Pankaj says. So restricted.
Pankaj bhai.
I'm taking a 2 minutes break, please. Just security.
Yes, sir.
Yes, Vishnu bhai, please.
Pankaj bhai, one more question often asked everywhere. Remuneration received by a chartered accountant partner from partnership firm, can he consider by that the partner under the provision of section 44 ADA?
There are direct decisions now, Vishnu bhai, that this
Yes.
will not be considered for 4480 or 4488. So therefore, this is not a remuneration. I cannot claim 50% out of that. So for 4480 and 4480, say, for example, I am a partner in a normal firm and I am receiving remuneration. I cannot apply 4480 on that. Similarly, 4480 cannot be applied on the remuneration received from my professional firm. That is my view. There is a recent Madras High Court decision also on this, and there is a old decision of Hitesh Gavaria, I think, Bombay Tribunal.
Now over to Piyush bhai, sir.
Yes, sir.
Piyush bhai.
Again, I would like to go to MSME and Sanjay bhai. Once again, a very important question. Is Udyam registration? I'm going to basic again. Is Udyam registration mandatory to consider auditee's status as an MSME?
You see, for determining applicability as an MSME, what is the basic document? Is it only the asset base, turnover base or something? So Udyam is one of the instrument by which we can certainly say that yes, it is a MSME and eligible. So it is necessary.
Right. So
I would like to, Piyush bhai, if you go
please.
through the definition of supplier, section 15 mentions supplier, and supplier is the person who has filed his memorandum in as required. So Udyam is must. Even if I have Udyog Aadhar, which was pre-cursor of Udyam, that will also not be applicable. Now specifically Udyam is required. So if I don't have Udyam, I am not an eligible supplier. And if I supply, there won't be any disallowance.
So during my audit procedure, I should ensure that the list of MSME which is going to be prepared to put
Udyam registration.
Only people who are Udyam registration should be considered.
Absolutely. Yes. And one more point I would like to add. There is a circular of MSME Ministry 26 August 2008, which specifically requires that if you are an MSME registered MSME, you print your MSME registration on your invoices, purchase orders. So if that number is not there, if there was a question posed to MSME department, how will the auditor come to know which entity, whether the supplier is MSME or not? So this 26 August 2008 circular is of very relevant.
Correct. No, sir, Sanjay, this is very important, a very beautiful question. And I think so the member has read line by line of clause 22. What is saying? in the new clause 22, is it required to report both subclauses 1 and 2/3, or is reporting either of two sufficient, given that or is mentioned under subclause 1? So if I read it, I think so. What he has pointed, it may be an error in Form 3CD. He says, my one says amount of interest inadmissible under Section 23 of MSMEB Act, or total amount required to be, as if one or two has to be reported. So can you clarify? Of course, I think so. My guidance note has already clarified that, but I would like to hear from you also, sir, your views.
Actually, if I take it in the substance over form, original 22 clause was only in relation to the inadmissible under 22. So when this was brought in 43BH was brought, so clause 2 and clause 3 was brought in for the 43BH effect. And clause 2 is more or less information. The clause 3 part B is substantive information for which the revenue is interested. So in my opinion, it is not this option that clause 1 or 2 is you are showing as or. So the clause 3 is not having an option. All three are
compulsory. Now, see, because the next question I was supposed to, you have rightly said, so there is no option. They have to report under clause 1, 2, and 3 also. Now, what is trying to say?
We may note it for their reporting to them that there seems to be some error in.
I think so. That has to be taken up. I think so. I remember something has already been taken up. DTC will verify that, and if it's not there, we'll tell them or ko nikalo bar. Or should be deleted.
But we must appreciate the member.
We should, definitely, I appreciate member, very valid point raised. And in fact, this was a big issue when we were drafting guidance note also came in. And as suggested and as your view suggested, we have taken that view also in our guidance note for the purpose of guiding the member. Now, the follow-up question on this is also very nice. Under clause 22, subclause B. So I think so it means subclause 3 and subclause B he is talking of.
Yes.
Are payment details required to be reported for entire year? Or is it sufficient to report the payment status as of 31st March? Kindly clarify. Yes, please, Sanjay bhai.
I think we both have to give comments here.
Yes.
Basically, clause 3, subclause B talks about not paid up to the time under section 15, and it is not or. It is the word and inadmissible. As you know, in any tax audit, there are three types of the report. One is information, the another is allowable, the third is disallowable. So inadmissible means disallowable. So 3B, we have to give only disallowable amount, not those which have been paid within the year but not within time. This is not to be.
So what to very specifically is saying, is it sufficient to report payment status as at 31st March? I would say yes.
Yes.
Correct?
Yes.
Yes. Because ultimately, and so though I am not paid up to time and inadmissible, when both the conditions are fulfilled, I will report under subclause B of subclause 3 of 22. It should be inadmissible. If it has not been paid on time, but it is admissible because it happened during the year. Not supposed to. So answer would be yes to the member who has a very nice point he has mentioned on that.
Thanks by one issue which I feel that since 26 already disallowed, and this will be again disallowed, so CCC may do a double disallowance. In this case, if the same amount is repeated here.
No, come back again, sorry.
See, clause number 26 specifically asks me to report disallowance, which will be for the outstanding items. And this clause, if I again report, there can be a double disallowance. There is a probability of double disallowance, in my view.
No. Pankaj bhai, actually, they have amended clause 26. So far as related to the current year, they have excluded 43BH there.
Perfect. Then the question is without a question. Thank you.
The clause 26 has also been amended.
Just to add a little further, very rightly said by Sanjay bhai that 43 was amended. Like the 43 has again been amended with a particular thing that suppose it is disallowed in assessment year 25-26. Next year they make the payment. Then they have amended this clause 26 to put in the figure for allowability, which was outstanding and not allowed. That has change has been made in this amended PCD. So members should take care that all that were disallowed in the last year and allowed this year, they have to fill it in PCD clause 26A. Please take care.
Very correct, Pramodji, you have mentioned it. In clause 26, capital B, they have removed, they have not got 43BH because that is getting covered under 22. But opening balance will be covered under capital A subclause of 26. Very rightly.
Very right.
Yes, sir. So thank you very much. Very rightly pointed out. I think so. I'll come to another important point because those are very regular points. Pankaj bhai, you are there?
Yes, please tell me.
Now, very important questions. Of course, there are many other questions. I got a printout of 5 pages coming over here. But I'll try to take questions which had come during the registration first, because if we are not able to complete that, I'll try to also look into that. A very important and very simple question. I think so. We need to again re-clarify, Pankaj bhai, from your mouth. An assessee doing business income of 1 crore has filed a normal ITR without tax audit declaring profit less than 6% or 8%, and return has been accepted by assessee. What will be consequences in future? Is it allowed? Sir, I think so. This is a very basic. If you can just give brief about it, that 6 or 8% is relevant or not, I can declare less than that. Please.
See, up to 1 crore if we talk about, if I am putting my balance sheet and P&L and maintaining books of accounts, then I am not required to get my accounts audited. Above 1 crore, then I am compulsory required unless I opt for 44AD. So 44AD is an optional beneficial provision. So if I go for that, then things are different. But up to 1 crore, if it is even the profit is less than 6 or 8%, but if I am maintaining books and putting my balance sheet P&L, then no requirement for audit, no implications.
Right, sir. Very correctly. Thank you. Because this is, though it seems to us that, but a lot of queries comes of this nature. Always, even after so many. I'll take a last question on MSME. There's a last question on MSME. More or less, we have tried to cover up on MSME, and then I would like to move to certain other clauses. Sanjay bhai, MSME disallows 43BH stocks of payments made to suppliers. Now, the payments means what? He has supplied the goods worth rupees 100 and 18 rupees is GST. I have not paid 118. What is my reporting requirement? 100 or 18?
You see, sometimes the law is not very clear on everything, but we have to understand the basics. Are we not claiming the GST as an expenditure, even though it is not routed through the P&L, but GST is claimed? So, in my opinion, I'm not giving any specific things in the at present, because this query is being raised by so many people. But according to me, it includes the GST also. The disallowance includes the GST also.
Okay.
Piyush bhai,
yes, Pankaj bhai.
I have a slight different view that since ITC is not a expenditure for 37(1), it has to be expenditure, and ITC is basically my asset. It is not an expenditure. So unless it is blocked the credit under GST, I would not disallow it.
Correct. So the question is, now again my question, because this query came to DTC also, and we have a lot of queries on this nature also. Obviously, I think so my guidance note does not is silent for the benefit of the members, because Sanjay bhai said I would interpret in this particular manner, and as I said, my guidance do not interpret it. It gives an auditor's responsibility. So you will have to take a view. It will have to be taken a view. So what I'm trying to tell you is, of course, the logic, you will have to take a view. If it is not an amount inadmissible in your view, you will not report under subclause 3 of 22B. But if in the total payment, you may still include it if you are of the opinion that because this is a payment included. You will have to take a call on this individual. My guidance note is not trying to interpret that. clarify to my members on that. At this stage, I would try to recognize we have our new Central Council member Arpit Kabra also, who has joined this recording studio at the Central Council. I would like to say Arpit bhai, welcome to you. He's also from Mumbai. Please focus a camera on him. Would you like to address? We have 6,000 members watching. They are all busy with tax audit today, and it's very important subject. Any feedback? I know you are expert in forensic audit, but tax तो आप भी भरते हो, तो सबको पता है. Yes, Arpit bhai.
Thank you very much. I think Piyush bhai.
अर्पित भाई एक्चुअली सर अर्पित भाई इनकम कमाते हैं, हम उसका इनकम को ऑडिट करते हैं.
Yes, over to Arpit bhai.
So I think first of all, at the outset, I must congratulate you for a very well drafted guidance note. I think we've got a wonderful guidance note, and I would request everyone to please ensure that set a perspective and then try and understand the guidance note actually covers almost every query that you may even think of, and it gets easily covered up. Probably you can also devise an opinion or strategy in terms of how would you want to tackle some of the very critical cases. Sir, I was since you were mentioning about MSME cases and all, I think it's a great nation building exercise and everyone has colored it. But the what I believe is there are some hardships that people are facing. And the chartered accountants are known to be practically practical solution providers. So I think maybe this can actually be a tool that can be utilized for having a very good structuring. I don't want to digress much on this, but this is a very good tool for all the chartered accountants who are here. They should try and work around, use this as a very, very good tool for structuring various transactions that the companies and the MSMEs would want to create and have a healthy environment in which both of these can coexist together. And of course, tax is something that is fundamental to all of us. I'm sure with Sanjay ji, with Vishnu bhai, with Pankaj bhai, Pramod ji, I'm sure we are getting a very good, the question answers are superbly drafted. It touches those very fine points that people largely look for clarifications. Of course, the WhatsApp groups are buzzing with all of these things, but I'm sure this episode, this kind of a question answer format really goes out and helps everyone in the nook and corners, especially in the villages, where all of them, after we've also introduced a 60 cap tax audits. So I've got a lot of representations where people are saying that, we are in a very small areas, and with just 60, our incomes are limited and all. But here using this platform, I would like to invite all of them to please start aggregating. Please start getting people who are not really engaged in practice areas, maybe in your area, in your town or not. But yes, they can actually now come and we can now actually organically grow into larger firms. Since Sanjay bhai is here, so one appeal to start aggregating together, because that's the call of the day for all of us.
Thank you very much, Arpit bhai. Thank you for joining us. Vishnu bhai, do you before I got a printout of 127 questions. No, not 100, 211 questions. But I don't know how far I would be able to go on that, because still original questions are pending with you also. Vishnu bhai, would you like to take some of those questions? Meanwhile, I just tried to take important out of this 200. You please continue with one or two questions till then.
Quickly, I asked one question to Pramod bhai and Pankaj bhai, because we have only 10 minutes left. Pankaj bhai, any key points of the changes in the tax audit report in this particular year, the key changes in the tax audit report in the 1 minute or 2 minutes, sir?
One very important thing is earlier when job number 31, 269 SSNT, we have to report whether account paycheck or not. Now they have specifically come out if it is journal entry, transfer of assets liability, they have specifically come out. So this is a very important thing in my belief which has come.
Vishnu bhai, 1 second, just follow up on this. Very important question. Pankaj
Yes.
bhai, whether deposits received from customers during course of its business are covered under that, number one. Whether the answer would be same in case of receipt of advance from the customer, which would subsequently settled against invoice raised by company on the customers. Can you throw light?
Yes, definitely. See, if it is a deposit or advance for goods or transaction, that is not covered in my view, because we feel the Northeast resources and acquisition general rules of interpretation. However, any advance received for immovable property is specifically covered. So express mention of one thing means exclusion of all others. So that advance is covered, not others, in my view.
One more question to Pankaj Bhai. Are shop and establishment registration, profession tax registration required to be reported in clause 4 of the tax audit report?
No, required because they do not form indirect taxes. They are considered direct tax, therefore they are not required in my perception.
Yes. Pramod Bhai, any view of this?
क्या question था ये वाला?
Are the shop and establishment registration,
No, not
profession
required.
tax
Yes,
registration?
no,
Yes.
no, agree,
Yes.
agree.
Over to Piyush Bhai.
Yes, sir. A very important question is there, Pankaj Bhai, and then I'll go to Sanjay Bhai. Very important. I'm reading it. Please listen carefully. In many cases, turnover reported in books GSTR 3B, GSTR 1, and Form 26A do not perfectly reconcile due to timing, discounts, or classification issues. To what extent is the tax auditor expected to reconcile these differences in Form 3CD reporting? And when can we safely rely on management explanation without performing a full reconciliation? A very pertinent and important question, because it is talking about tax auditor's responsibility, and which is the heart of the subject. I'll start with Pankaj Bhai.
Piyush Bhai, we have to go as per books of accounts and accounting principle for determining turnover. As far as reconciliation, all these are concerned. If there is something which is not turnover and included by the client, then that is not true and fair. So therefore, we have to qualify as per accounting. So ultimately, reconciliation, everything the client has to do, and as per accounting standard line, whatever is turnover, we have to consider that, in my personal view.
So you are trying to say if they are not been reconciled by the client, I should disclose in my report. I would not use word qualified, which you said. But let Sanjay Bhai add to it.
Piyush Bhai, actually, basically, if you are doing a tax audit, so you have to see the first of all financials, which is most important, as very rightly said by Pankaj Bhai. So for the purpose of determining whether it is a tax audit due, whether tax audit is required or not, the financials are required to be seen. And if prima facie something is included in the financials as turnover and which is not the turnover, then a call has to be taken. But reconciling with 3B or anything is not at all required for the purpose of determining whether tax audit is required to be done under clause 8. So we have to be very careful about the clause 8. If it is there within clause 8, as per financial, you have to do it. You don't have to do the reconciliation, etc. This is my view.
So I need not reconcile, you mean to say?
Yes. You have to go according to financial.
But sir, question what I understand is, because I'm also certifying my financial statements.
Yes.
Of course, there would be a reporting issue, but my financial statements, because I have to get revenues reported in financial statements, I need to have certain comfort level that they are in accordance and they are matching.
So that's why I said prima facie you have to see that something which is not there. For example, if you have shown in your sales your capital receipt, if suppose an asset is being sold and the gross value is shown on the credit of the P&L side, and on right side you are claiming the expenditure. So these are the accounting mistakes. So as per accounting, as very rightly said by Pankaj Bhai, that as per accounting we have to go, the turnover, sales, gross receipt, we have to see, which are related to business.
Okay, fine. But there are so many queries on 44AD, it's still coming on, as if obviously on 44AD now also, and then 44AB applicability also, you can have a full-fledged session itself, Pankaj Bhai. But I'll move little ahead. I'll try to take on F&O also. If the total income from future and option trading exceeds the basic exemption limit, whether audit is applicable to assessing. I think so. What is trying to say, total income from F&O option exceeds the basic exemption limit, whether audit is applicable. Total income is not a criteria, if I'm not wrong, Sanjay bhai. It's a turnover, and for purpose of turnover, they have to rely how to calculate of my guidance note. Yes, you were the architect of calculating the turnover on F&O, whereby the number of audit increased because you added premium, both premium plus. You please explain, sir.
So far as the minimum taxable limit, actually, if we go to the 44 AD, the section talks about, I think, the income. So the viewer, I think the participant or the member basically wanted to know it that if suppose, even though my turnover exceeds a limit of 2 crore or 3 crore as the case may be, but my income is below 2.5 lakh or 3 lakh as the case may be. So whether the audit is compulsory or not, in my opinion, the audit is required to be done, and we should not claim the income is one limb and the turnover is the another limb. We have to believe on the turnover limb. This is what I.
Yes, yes. Vishnu bhai, you have any questions? Should I continue?
No, you continue, sir.
Yes, sir. Sir, again to Sanjay bhai, ITR filing he is talking of, there is a tax deducted under section 194JB. Whether declaring profit under 44 ADA is mandatory. 194JB. 194J, I believe, not B. He's talking of 194J because it applies to professional, if I'm not wrong.
Yes.
And he says that TDS has been deducted under 194J. So whether 44 ADA is mandatory, sir?
Actually, this is something we have brought to the notice of the exchequer also. The 194J, because if suppose your tax is being deducted under the 194J and you have a receipt of more than 50 lakh rupees, then they will issue notice to you. This is a, you can say, difference of opinion. Audit is to be done under section 44 AD only in respect of 44A specified profession like chartered accountant, lawyers, and others also, those who have been notified. So this is something, a gap is there for deduction of TDS. So according to me, this is a gap. And there cannot be any answer. No audit is required if he is not a specified profession.
Okay. Pramod bhai, you are there?
Just concurring with the view of Sanjay bhai.
Okay.
Merely deduction of TDS will not make whether audit is applicable or not.
Okay.
Very rightly said by Sanjay bhai. You have to see whether it is coming into 44 ADB or not. ADA होगा specified professional होगा because under people are deducting TDS under 194J even if they are not covered under 194. So merely deduction number will not
right, sir.
But Pramod bhai, notices have been issued to the people in respect of the TDS deducted under 194J. Exceeding 50 lakh.
So he's supporting your view, sir.
Yes.
Sanjay bhai?
Supporting.
We have already brought to their notice.
Sir, I think so now on this, very important, we have already we are 6 o'clock. We have so many questions. I don't know whether we will be able to take up. If I missed somebody's question, I've tried to go, myself and Vishnu, we have tried to go with the chronology. We have tried to merge. My humble, I would say sorry to you humbly, if I've not been able to questions, but it would be our endeavor to answer all those questions. Maybe we may have some another panel discussion also in the coming time before the tax audit season ends. But before that, a very important question has come. I think so, Pramod bhai, if your voice is clear, I would also like to hear from you. There is some very important. There is some opinions coming that trust registered under section 12AB can make financials in horizontal. Yes, Sanjay bhai, पहले आपको.
नहीं बोलो प्रमोद भाई.
प्रमोद भाई ने शायद नहीं किया ना. Unmute. आप बोलिए.
I think our non-corporate is not applicable on NGOs, and just a minute, if readily it is available to me. It is not applicable to trust.
NPOs to the extent. Yes, sir. Pramod bhai? Meanwhile,
Are you able to hear me?
Exception.
मेरी
please go
आवाज
ahead.
आ रही है?
आ रही है.
Sir, so our members should understand this very clearly. What is applicable, what is not applicable. It is not that only when it is applicable, then you have to comply. Now, for NPOs, there is another publication which is issued by CSC, where the formats have been given, and again, previous year figures for them also are mandatory since year 2000. What stops them from standardizing the format to the
Voice
country?
crack.
What stops them from standardizing the formats?
Okay.
You know, in my education, always go with the format which has been issued by ICI. They are the members of the ICI. So why they are thinking what is mandatory, what is not mandatory? So together all accountants can standardize the format throughout the country, and they are missing. So why they want to miss this opportunity?
Pramod bhai, I'll
Huh?
supplement to the question number 6 of the FAQ. The last line of that says, format for NPO have been specifically recommended in the technical guide on NPO, and the same are relevant for the purpose of preparation of financial statement of NPO. Hence, in the given case, for preparation of financial statement of XYZ Foundation, the technical guide on accounting of NPO is relevant.
मैं भी यही कह रहा हूँ सर जो आप कह रहे
Yes, sir.
हैं. My thought is not different from you.
Actually, your
What
guide is not very clear.
That way because I'm at the airport, so some issue could be there. So some issue would be there, but I'm just telling to the members that
Right.
they should comply with the formats which are given by the institute. Why they want something different? They should all be together. That is the only thing I want to say.
Right, sir. Right, sir. Of course, it's already 6 o'clock, so I would like to not take it further. But for the benefit of members, I have received very specific questions in regard to regulatory difference balances in case of an electricity company. I have received on certain NC accounting formats to RWA, where the Dutch basis has been followed, which are very specific, I think so, which may require much more deliberation, and I would not be able to take it up over here. But if you have any specific query to all the members, which are not in a general in nature, but are specific to a particular industry, my request would be you may write to dtc@ici.in. It would be our endeavor if we can try to give our views or what we generally do is, obviously, institute would not give, as I said earlier, also views on the tax policies or the tax interpretation, but we may refer it. Generally, we have our direct tax committee. We have on the direct tax committee a lot of tax experts also, and they are for the purpose of the helping the members. They are supporting us regularly. So whenever such queries comes, we try to forward them also, and they also respond to it. And that is their love for this particular profession, wherein they want to help the other chartered accountant professionals. So if you have any such specific queries, my request to you would be please do send to us. We'll try to take it up. But there were a lot of other queries on 44. The most worrisome which I came across with the various questions, Vice Chairman sir, where in regard to 44 AD, 44 ADA, there are so many questions yet also. So I think so we may plan one more session on that specifically also, though we have done earlier also, but I think so people are not happy or they are not satisfied with the answers which are coming as far as 44 AB, AD, ADA. There are still a lot of confusions keeps going on their mind. So we'll try to resolve as far as possible from our direct tax committee. At this stage, obviously, I would thank you all the panelists and all the members who have joined. More than 6,000 members were listening to you. Obviously, I know, as I said, we had Bhishma Pitama, Lord Krishna, and Arjun. Nobody less in this subject. Thank you very much. I would request now my
But
vice
Chairman sir, the Brahma and Vishnu were there to oversee that we were doing right.
Yes, sir. Now, when Vishnu Bhagwan himself has come now to give vote of thanks. So I'm requesting, because I know who are the stalwarts. Only Vishnu Bhagwan can give vote of thanks now. Vishnu ji, over to you.
Thank you, Chairman. It's my immense pleasure to presenting a vote of thanks to beautiful webinar presented by Sanjay Agrawal ji, Pramod Jain ji, and our Pankaj Saji, and our chairman, none other than Piyush Chhajed ji. So it's my immense pleasure to presenting vote of thanks from my bottom of heart to giving beautiful solving queries of all the members and attending more than 6,600 members present today's this webinar. It is the record members presenting in this particular webinar and giving your valuable times, all the three panelists, Sanjay Bhai, Pramod Bhai and Pankaj Bhai, to resolve each and every query of our participation. And I again thanks to our office, Priyaji, to compile all the queries and giving efforts to this particular webinar. And thanks to Piyush Chhajed ji to giving his valuable time to moderate this particular webinar. Thank you, friends.
Thank you very much,
Thank you.
Vice Chairman, sir.
Thank you.
Thank you all the participants. A very good
Thank
evening.
you, everyone. Thank you.
Stay safe, stay healthy. Goodbye. Thank you.
Goodbye. Thank you. Let's stop.